all of us want a stock of the future. No wonder people went crazy for renewable energy stocks at one point of time, and as of today they are crazy about cannabis stocks in the United States, and around the world people are going crazy for electric car and components thereof stocks that are basically inclined towards electrical vehicles. I want to discuss a stock that screams at the very first page of its annual report: the future beckons. We have to admit, this sort of stuff gets the retail investors really excited. Now, retail investors are non-professional investors like you and I. We are investors and we rely on our friends, family, and even news reports for our daily advice as to which stock to buy and which to sell. There's another thing about retail investors: we get screwed the hardest. Well, we'll discuss more about that in another video. This company, with its indefatigable spirit, is not only poised to make the best of the renewable energy market, but actually has a majority share in the market, that is of 39%. And it operates in an industry which has previously grown at 11% per annum, which is pretty impressive. But it does not stop there. The company also has several accolades to its name. It's won several awards, most recently the Gold Award at National Award for Manufacturing Competitiveness, and several others. Now, before I forget, I'd also mention that the company, as of last year, did sales of 5,000 crores. My question to you, fellow investors, at this juncture is, would you buy this stock? Now, it would be prudent and reasonable of you to plead that the information I've provided to you is incomplete. I have said that the company is a dominant player. I have said that it has won several awards. But what about its earnings? What about shareholding pattern? What about its finance? And for that, we're going to further peruse a very pertinent document that we call the annual report. On a more keen inspection of the annual report, which is the Magna Carta as far as any company is concerned, I find that last year the company did a revenue of 5,000 crores, and the year before that the revenue was 8,000 crores. As of last year, the company has actually lost money. It has reported a net loss of roughly 1,500 crores, and because there are no profits, the company has reported no dividend. Now, this situation gets me really intrigued. At one hand, the company beckons that the future is waiting for it. It's a dominant player. It's also winning awards. But why are the finances so abysmal? I don't just stop there. I go on to the shareholding pattern and find out that the promoters only own 19% of the company, whereas individuals like you and I, the retail investors, the ones to get screwed the hardest, have ownership to the tune of 41% inside this company. You're going further and then you realize that the promoters with their 19% shareholding have actually pledged most of it. Now, pledging is a last resort to obtain finances for a company. When a promoter pledges their shares, it takes these shares, keeps them as security with the bank, and in return obtains loans. You have to understand that when a promoter is pledging its shares, it's the last resort, and also points that the company might otherwise have also a lot of debt on its shoulders. So I'm gonna go and find out whether the company is heavily indebted or not. It must be remembered that thus far the stock does not look attractive, and all this pledging wants me to disregard the stock altogether. But for the sake of analysis, let's go further and find out how far the company is indebted. I want you to remind that the company had done a revenue of 5,000 crores. Its debt, my fellow investors, is to the tune of 6,827 crores. The picture is not rosy at all. However, this is a stock that has been so popular with retail investors. The said stock is almost a household name. The people of India have pinned their hopes on this stock, and it currently trades at rupees 3 from a high of rupees 420 in the year 2008. I'm talking prior to the recession. that hammered most of the stocks. Now, though I'm thoroughly disheartened, I scroll down the annual report and find some pertinent information, such as that the company has been fined roughly 1 crore by SEBI, and the CEO draws a salary of roughly 4.5 crores. I want to wonder, when the company is performing poorly, when the shareholders are suffering, should the CEO be drawing such a handsome salary, if at all, if it hasn't been established? A keen perusal of the annual report is so very important for this very reason, that it gives you information about a company that you wouldn't find from your friends, family, or from the news reporters, who mostly are heavily biased towards a particular stock or particular industries. I haven't even delved into the balance sheet of the company, the profit and loss statement, the cash flow statement. I haven't even read the management discussion and analysis of this company, and yet I have so much information at my disposal that I choose to totally disregard this stock and park my money elsewhere where it shall appreciate and not only depreciate. Now, if you buy this stock without researching it, because if you do research it, you're not going to buy it. But let's say you buy it because you're a retail investor. Let's say your friend told you to buy Suzlon Energy, which is this company, and you lose money therein. And if you lose hope in stocks, then my friend, your lack of research and your lack of initiative is to be blamed, and not the stock market itself. Next time, pledge to never buy a stock without perusing the annual report. And if that is too much, have a glance at it. And if still that is too much for you, the index fund is there to build wealth for you. Nothing is stopping you from building wealth. Nothing at all. The stock market is your tool to build wealth and not to give it away. Remember that.